Hey everyone, welcome to episode 259 of the Your Money Your Life podcast. Make sure wherever you listen, you like, subscribe, five-star rate, and review the pod. Do the same thing on YouTube and everywhere that you are listening. Let's jump into it. First and foremost, we just want to get into, the market and what is going on. Yesterday was actually a big day for the market. We had some new data that was taken in by the market, earnings season as well. So let's go with the earnings season first. You've seen the banks come out with their earnings, and they're pretty much showing that things are doing well in the bank land. So Bank of America, they had earnings and they said they beat on revenue. Morgan Stanley climbed almost 2% after they beat on the top revenue and the bottom line income as well. Goldman Sachs, strong earnings. So earnings season is off to a decent start for the banks at least, which they're opening the kickoff on earnings seasons usually. So the earnings season off to a strong start overall with 77% of the companies that have reported thus far beating expectation. This is per FactSet, a data company, financial data company. So again, we had a strong session yesterday where the Dow, Nasdaq, S&P 500 were up quite considerably, and then the 10-year U.S. Treasury yield pulled back from a 14-month high. So the yield usually goes up when things aren't so well in the stock market, and then of course conversely goes down when the market seems to charge ahead. So the bond market was starting to price in more rate hikes. And that's because of the data that we saw. Remember, we got new CPI data. It showed that the consumer prices were, cooler than expected slightly. And that just gave investors hope that we would potentially see more rate hikes than we are being cautioned that we will see, which again, the Fed saying that in 2025, we're not going to cut rates that much, maybe two times, right? But investors got the data on inflation and said maybe they're actually going to cut more. But I don't think they will as of yet. Inflation is still sticky, even with even with the data that we saw earlier this week. I still think we have inflation issues in our economy. Let's look at the actual chart on S&P 500 the past 5 days. Past 5 days up 1%. Last month, down 2%. Year to date, we're off to about a flat start again. Slow out the gates year to date so far this year. We said our prediction would be more in line with a regular gaining year, right? And I think through the first half of the year, we'll see most of that juice and most of that performance. And the second half of the year, we'll probably see things taper off. And that's kind of what we are seeing so far with the data, but that could switch when we get more information. But again, if you look at a year time frame, still powerful returns in the market on the S&P, and over 5 years, even more powerful. So that's why you should be in it for more of a long-term game rather than trying to get something out of it for a day or two, a week or two. It's just never favorable for people that try to do that. Stick in the market for more. TikTok. TikTok is going dark Sunday. I didn't actually believe this would happen. I was skeptical up until everything that's happened occurred so far. I'm still skeptical. I think there'll be some sort of action either by, the administration, something that's going to, delay this. But they're planning to shut down the U.S. version of their app on Sunday. This is by a law mandating its divestiture or removal from American App Store. So they have two choices: they could sell to an American company, or they could be removed from app stores. And this is going to go to effect on Sunday. Again, I was skeptical that this would actually occur. This is information, the information reports they cited in anonymous sources that unless the Supreme Court intervenes, so the Supreme Court has to intervene, when users open TikTok, they'll get a message linking to information about the ban. Until now, the presumption has been that existing users might still have access to TikTok until it's degraded beyond usability. So people thought before that they would still have access if they already download the app, and it was just going to be new downloads that would not be permitted. But now TikTok is saying, guess what? If you guys want to take it away from new downloads, we're just going to remove our app from everyone that's in the US. And I think there's a smart move on their part. It's calculated. They want to make enough uproar because the people that are addicted to TikTok, whether they have like 100 million users, 150 million users, especially in the US, right? The people that are addicted are going to make an uproar because they're going to open the app on Sunday and be linked to this information about why this is banned. So Here's what's at stake. There's 24 billion contributed to the U.S. economy last year, with small business accounting for 15 billion. So people are pointing to how a lot of small business owners use TikTok. Creators and businesses may lose up to 1.3 billion in revenue in the first month alone. Companies that rely on TikTok for marketing and sales have a huge challenge ahead. So yeah, it's going to affect a lot of people that use that primarily for their funnel for new clientele. And so it's again, it's a ban. It's Sunday. It's Sunday. What is it? We're if you listen to this on Thursday, it's a few days away. We'll see what happens. But for those that are TikTok users, I don't know if you're out there. You are. Again, I have the platform. I've it's been known I've been not that much of a user of it. I maybe log in once a month, if that. But it's interesting to see what happens when a potential ban happens. We talked about bank earnings. Let's dive deeper into it. Bank of America and Morgan Stanley, they both reported better than expected earnings. They had profits surging 47 and 145% respectively. These rosy numbers came on the heels of a banner fourth quarter profits at other major financial institutions. We told you banks kick off earnings and they're doing decently well. So it's really let's look into the numbers more. So for Bank of America, that revenue net income up. Investment banking was, apparently the strongest area for them. So their investment banking revenue must be some M&A activity for them or some different areas where they're getting advisory fees for banking. So I'm actually curious on what's driving the investment banking growth in their business unit. Trying to come back. Larger banks. I'm assuming the regional bank stocks are still in the crapper, but the large banks are coming back. Apple Severance, one of the best shows that me and my wife watched, season one. It's coming back, and they're doing a really cool stunt to promote the return of Severance season two. Friday, I guess tomorrow for those listening today on Thursday, they had a marketing effort where it's making waves over social media. So like unlike other companies, they just tried to do something different. They set up Cubicle in New York City's Grand Central Station for the New Yorkers. You know what Grand Central Station is, huge train station and hub and transportation hub. They set up the Cubicle similar to the Cubicle or identical to the Cubicle used in the show. And they brought in the real actors and they brought in the real actors that were sitting there and doing whatever they do. And it was a real live fishbowl moment for people. And it's a really good marketing ploy. Everyone's talking about social media. I think it's great. I might, if it's still going on today, I might actually I probably won't. I'm not going to even lie to you. I'm not going to pop in, but I think it's really cool that they're doing this. Ben Stiller, if those don't know, I think he's the creator or he's the producer or creator of the show, which is really cool for him because this is a hit show that's gotten rave reviews from the second season for the critics that have watched it so far. So that's really good takeaway for consumers and a bold marketing ploy. Again, you're seeing the videos for those on YouTube watching all over. Really, really cool that they did that. Um, let's look into holiday sales. I think this is super important. Holiday sales came in strong. So those retail purchases, they were rising the most in 3 months during December. This is excluding cars, stations, food services, and other building materials. Sales rose 0.7% in December. So of course, December, one of the bigger retail months, and that data point is super crucial. Total purchases rose 0.4% in the month as well. Target joined other retailers in raising its fourth quarter sales forecast, citing a 2.8% jump in purchases in November and December from a year earlier. So people are saying it was a decent holiday season. I'm actually curious, adjusted for inflation, if these numbers hold up, if it was sales of items or actual unit sales, or if it was increased prices. Because again, it was an interesting holiday season, I would say the least. But and also discounts. Discounts have are play a part in whether people are going to buy if they see a good deal. So these things are all playing a part and much be watched closely. This is an interesting data point, people. The value of the 20 stocks in the ETF TOPT topped. It's like I think it just pretty much takes the top market cap companies. That value nearly equals the rest of the S&P 500. So the S&P 500, obviously 500 companies. If you just take the total market cap of the top 20, you're going to have the same value, almost off by 5 trillion, but almost the same value of all the other companies in the S&P 500. That's been crazy. Just showing how everything flows to the top. And one of the biggest companies, of course, Apple, Nvidia, Microsoft, Amazon, Google, Meta, a lot of these tech companies, Magnificent Seven, and there's some other ancillary ones, Visa, Johnson Johnson. But if you think about it, everything flows really, the value flows to the top, and that's something to always think about in anything that you do. Honestly, it's really something to really a good barometer and marker to hold. Let's see if there's anything else for us to discuss. There wasn't craziness. Um, there wasn't much else. I don't think there was anything crazy. Let's go to the question of the week before we talk week highlights. But question of the week was a good one. Let's dive into the first one. How many states? I think we've done this one before, but it always pops up. But how many states don't have state income tax? I think it's like Texas, Florida. It's one of the weird ones. Isn't it like one of the Dakotas, if I'm not mistaken? Texas, Florida. It's like Texas, Florida, why like one of the states. I know there's like 6 states, but I don't remember all of them. So that's I should know. 9 states. Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. 9 states. Interesting. Top marginal individual tax rates. Okay, okay. There's 9 of them. Let's move to the next one. How many states raised their minimum wage on January 1st, 2025? I actually don't know this. I know that other states had done it prior to this, but was there a mandate that states had to do it on January 1st, 2025? Did some have some new legislation that kicked in at this point? If they did, I'm going to guess maybe 10 states. The answer is 21. 21 states will increase their minimum wages on January 1st. And let's see, and it has a good diagram so you could see all of them. Minnesota, Illinois, Ohio, South Dakota, Colorado, Washington, Maine. Okay, New York. New York is doing it. Interesting. Interesting. So 21, what happened to the other states? Why did they not want to? What happened to the other 29? I'm super curious. Folks, this has been another good week of Your Money Life podcast. I will be in Florida scouting some nice talent for New Street Sports Agency, New Street Advisors Group. We have some different webinars and things coming up in the future. Stay tuned to that. We'll keep you abreast. So much more going on. But of course, as always, stay locked in. We'll see you next week.